All right. Hello, everyone. I'm Cody Charnell. I'm a multifamily real estate broker here in Long Beach, and it's a special day. I have Irvin here. He's a residential lender with Cross Country Mortgage, and we decided to jump in our little podcast studio and kind of share a recent win that we had with some clients. So, Irvin, thanks for joining me.
No, thanks, Cody. Thanks for having me. Happy to
So,
be here.
yeah, and so let me explain what happened. So we've been working with two brothers. They've been trying to get into a multifamily property using owner-occupied financing for a long time. And it turns out one of the brothers he served in the armed forces, so he had a VA entitlement. And I actually didn't know this before this deal, but what what we all learned, you already knew this, but what the clients and I learned is that you can actually partner with a non-veteran on a VA purchase. And I don't think a lot of people know this, so I thought it was important to have you in to kind of talk about this. So, I just want to go through the details. So, tell me, why is this possible, or what, like in a traditional VA loan, usually it's just a veteran or a veteran and their spouse, but with this one, we had a non-VA borrower who was also on the loan. So, can you talk to me a little bit about what's different with that structure?
Yeah, absolutely. So traditionally, if you're a veteran, or you're a veteran with married to a non-veteran spouse, like I am, you're able to buy a property with 0% down, right? There's a lot of I won't call it misinformation online, but a lot of half information about what you can do to partner up if you want to buy. You're a veteran, right? And you want to buy a property with your brother who's a non-veteran, right?
Hmm.
So it is possible. The only stipulation that the VA, our Veterans Affairs, actually puts on there is that you got to put 12.5% down.
Gotcha. Okay. So let's break that down. So typical VA loan is 0% down, and that's with just the veteran or the veteran and their spouse buying. So now we're bringing in this partner. In this case, it was a brother who's who's going to be on the loan,
Mm-hmm.
and he's also going to occupy the property.
Mm-hmm.
And the VA is requiring 12.5% down. So why is that?
The 12.5% down comes to adding the non-veteran to the loan. So the veteran technically he's at 0% down, right? So but if you're adding a non-veteran at 12.5, you gotta, or I'm sorry, let me step back. You got a VA borrower, he does 0% down, whether it's 1 unit, 2 units, 3 units, 4 units, right?
Hmm.
If you're adding a non-veteran that's not married to you, you would have to add 12% down to the one non-veteran. Now, this is where it gets even trickier. If you want to add another sibling to it, if you wanted to add two brothers to qualify, you'd have to add 12% down, 12.5% down for the one brother. And then if there's another brother that wants to go on there to qualify, you got to add another 12.5% down
So 25% down total.
per non-veteran borrower.
Interesting. Okay. And so a lot of people are probably thinking, like, with that down payment requirement, why wouldn't you just go with the 5% down conventional loan, right? Because that is an option on multifamily property now. So these two brothers could just skip the VA altogether and do 5% down. It's still an owner-occupied loan, but why in this case did they decide to go with the VA loan instead and put that extra money down?
So I think when we were initially talking about the client doing the consult, they did qualify as a conventional loan,
Hmm.
but the rate was about 1% higher. So you're looking about, off the top of my head, let's call it an extra $600 amount, $600 a month. Let's call it $600 a month. And then on top of that, you'd have, with the conventional, you'd have mortgage insurance, which off the top of my head on this specific file would be about an extra $150 a month. So they wanted to, as a team, we obviously want to do our due diligence and do what's best for the consumer. And so, hey, saving an extra 750 a month to go the extra mile for the veteran and the family, and obviously for the long time savings, long time interest, like, you know, it's it's a pretty big chunk of change over the course
Yeah.
of even a couple of years.
That's huge savings. So what I'm hearing is the VA loan had a lower interest rate, even though like the down payment requirement was higher. you get the better interest rate.
Correct.
You also get no mortgage insurance, right? So if they went conventional, they'd be putting less down, but their monthly payment would have been $750 higher, like you're saying.
To your point, 100%. And I was even like, okay, if we're to your point, if we're comparing 5% down versus the 12 and a half, we'd technically really be at like a $1,300 payment difference. So I was just giving the example, if we did 12 and a half down on a conventional,
Oh, wow. So it's even bigger.
correct. So versus 12 and a half down versus VA. And I was doing the math and I go, well, we can do this, but we just, I mean, why wouldn't you want to take advantage of those
Right.
VA benefits?
Yeah, it makes sense to me. And the other interesting thing about this particular partnership was the brother who had the VA loan didn't have the financials to qualify for a purchase on his own. So bringing in a partner who had money to contribute and the income to help support the loan was a huge benefit. So yeah, I guess
No, 100%. Yeah.
for other people who are out there who might have a VA loan, but they might not be able to qualify for a loan, this could be an option that they could look at.
It's kind of where I go back to the internet thing. It's there's half information out there, not full information. So you want to talk to a mortgage professional and your real estate agent, whoever you feel comfortable working with, to make sure that they dial it in. Even if I don't mean to knock on like the number one online lender, Veterans United, but they won't. They essentially try to stir them to go do a conventional loan because if you're an online lender, you're just there to do it's easier to get the transaction through and not what's necessarily to the best of the benefit of the client or the veteran, right? And obviously, I mean, we could have did the same on this transaction, but it wasn't to their benefit. And I mean, I don't know. I wouldn't sleep good at night if we actually did that at the same time.
Gotcha. Okay. So we talked about the down payment requirements. Let's
Yeah.
talk about some of the other requirements for
Mhm.
this type of structure. So both needed to occupy the property. That's one of the stipulations of the VA loan, right?
Correct.
Was there a reserve requirement? So did they have to have money in the bank after closing on this one?
Yeah. So since we did an actual 2 unit, you would need 6 months of reserves, or the veteran needs to have 6 months of reserves in their account post closing. So let's say the mortgage payment is $5,000 a month. So 5 times 6, post closing, you need 30,000 in a liquid, retirement, IRA, 401k. Any of those accounts are always acceptable.
Perfect.
If it's a single family, you don't need reserves. But if you're doing a 2 to 4 unit, you have to have reserves for the mortgage payment.
Got it. And I think we also ran into a rule about property management. So if you're looking to do this type of deal structure and purchase, and you don't have any like prior ownership of rental real estate, you actually need like you need to have a property manager in place after close, or what's the exact requirement there?
So if you have a prior rental property, it could be out of state, or any type of investment property, or a history of it. Or let's say let's say the veteran bought a property 2 to 4, had a rental 3, 4 years ago, and is that as long as there's a history, we don't need a property management contract in place. So if you're like a first time home buyer and you're buying your first duplex, triplex, fourplex, there would be a property management company that would need to oversee at closing and have that in place, that they're gonna, since you don't have any prior experience. And again, we're just going off the specific VA guidelines and trying to satisfy those in that context. You would need to have a property management contract in place. So I don't roughly how much do they take off the top?
Around here, it's around 6%.
Okay.
In different parts of the country, I know it's
Yeah.
more, but if you're in Southern California, I think that's ballpark.
Okay. Yeah. So roughly, you would just need to have that in place if you have no rental or investment property experience.
One other thing that we talked about kind of during the whole qualification process was the fact that typically VA loans have the option of doing a streamline refinance.
Mm-hmm.
So with this structure, is that still possible? And can you also just explain for people who may not know what a streamline refinance on a VA loan looks like?
Yeah. So 100%. So a VA IRRRL or VA Streamline is where there's no appraisal required. as long as the interest rate drops at least by 1/4%, the veteran is eligible to do a refinance after 7 months of closing escrow. So it's a little bit different than like conventional FHA, but you just got to wait 7 months. No income docs are required, no appraisals required. They're just going to verify that you still have a job.
Wow. So that they basically just say, hey, the interest rate's dropped. You're still employed, so we'll give you a lower payment.
And even if there's been any kind of credit issues, no, you don't need to pull a credit report either.
Wow. Yeah, so that's a big deal. So that's something else that we looked at when, we were considering doing the 5% down versus the VA. Because we are in a decreasing interest rate environment now, the Fed finally started the cutting cycle, and the buyers realized that and they wanted to be able to take advantage of that. And with the VA loan and the Streamline refinance option, it turned out to be another plus for the VA loan.
Oh yeah, it's a huge advantage, like regardless of what happens down the road. And obviously the veterans always have to, in order to do a refinance or transaction, they have to live at the property. It's just once in if rates on the VA side should drop down to low fours, like, they can take advantage of that or even before then.
Hmm. Yeah, I think when we first started the the loan on this one, VA rates were what, 5.6%?
Correct. Yeah.
And my brother's actually a veteran, and he bought a house in Colorado a couple years ago.
Hmm.
We've been looking at refinancing or helping him get into a refinance, and he's getting quoted like around 4.9% now, somewhere in that ballpark. So rates just in the last 30 days have come down quite a bit.
Yeah. I mean, and the other thing in just talking about aside from the rates, like, yeah, they are down to 4.99 on an SFR.
Mm.
The bigger things that, consumers, veterans, anybody that's looking to refinance is like, how much is that monthly payment going to drop?
Mhm.
So is it worth it if it drops 250? And that's, up to the consumer, right? Or is it, okay, I'm going to wait till it drops to 500, which, depending on the loan amount, it may or may not happen. But if you're talking VA from 499, you can take advantage of it now. And then I do believe VA rate specifically will drop to the low fours. And so when the 4.5 is, it's going to take time for that to matriculate, at least like, I mean, I hope sooner, but let's call it at least 6 months to a year. Like he can refinance and do another VA IRRRL at that time, and then also save himself the interest in the interim.
Yeah, definitely. And so there's one other piece of this that I wanted to talk about.
Mm-hmm.
So when you're doing the VA partnering with the non-VA,
Mm-hmm.
it's kind of unique, even in like when you're getting underwriting done. So we had to do a manual underwrite, which took more time than I think a traditional VA loan would. So can you set expectations for people? So if they're going to do this type of structure, what does the manual underwrite look like?
I would allocate to have at least 7 to 10 days on your escrow timeline to understand, because when it goes to the VA, which you're dealing with government, right?
Hmm.
It could move really quick depending on how busy they are, or it can be like you're sitting at the DMV.
Got it.
So I would allocate, let's say if they're originally thinking to do a 21-day close,
Hmm.
and I'm just being aggressive here in Southern California, just mentally prepare for an extra 10 days on top of that. So 30 to 35 to be safe, just depends on, and I think it also comes when your offer gets accepted. It's easier when your offer gets accepted on a Monday versus a Friday at 5 p.m.
Yeah.
So when you guys are doing those timelines, just kind of keep that in mind. And the other thing is, even though the VA, they may take a little bit longer to issue that final approval,
Hmm.
their job is to approve that loan for the veteran. Like, I mean, and technically, like a lot of, when you're doing a quote unquote manual underwrite, like, technically you don't even need a credit score to do a VA loan. Most
Wow.
lenders won't touch it, but it's, it is possible, but there's other compensating, what they call compensating circumstances. The income there, is there other reasons why, like, is they're going to get money from a potential rental unit or whatnot. So, I mean, even though it may take, a little bit longer to get it through and have to send it to the VA up front versus a traditional VA loan, 0% down married couple or single veteran, like they're there to help. They're there to help out the veteran.
Got it. Okay. Yeah, it sounds like they do have the veterans back, and they want them to get the property and be successful. But dealing with the government can be slow sometimes. So
Yeah.
they have their heart's in the right place,
All
right?
right.
So if somebody wants to try and do this, um, we did this on a duplex. They can go up to 4 units. Is there any difference between doing this on a duplex versus a triplex versus a 4 unit?
Um, no, as long as the one thing but obviously I know you prep all your clients for is to make sure that to make sure that the rental income is there for the consumer to qualify.
Okay, so you
For
can
those,
you can count the rents towards what they make at their job to help qualify.
right? So obviously, if the rents for, say, we're doing a 4 unit, right, and if the market rents and they're going to be delivered vacant are all 3K a piece, right? That makes a huge difference if there's a rental agreement in place and you're taking the 1 unit as owner occ and then you got 3 units at 1,000 a piece.
Mm-hmm.
So I think that's the biggest caveat for veterans or consumers out there is to make sure to work with you or their real estate professional to verify those rents.
Makes sense. Okay.
Because I think that's the biggest thing. It's like, oh well, you qualified for me 1 million, and now you're saying it's less. I go, well, what are the rents? They're like, I don't know. Like, well, that's a big part of the equation to help the consumer or the veteran qualify.
Got it. And on the 5% down conventional loan that we've mentioned a couple times,
Mm-hmm.
I know there's loan limits. So duplex has a max loan limit, triplex has a max loan limit, 4 unit
Mm-hmm.
has a max loan limit, and it kind of steps up as you add more units. With the VA loan, is there any loan limit that you're going to hit or?
There are no loan limits with the VA for any loan type.
Wow.
What different thing that may happen is that maybe the specific VA lender may be capped at 1 million, maybe capped at 1.5 million. So you got to make sure that, the mortgage professional, well, you got to make sure that the mortgage professional they're working with, they're able to accept and approve that loan limit, whatever that is.
I see. Okay, cool.
Because on a crazy note, you can actually technically, I mean, I think the conforming an FHA loan limits maybe 1.92 million, but I mean, you can do a 4 unit, $3 million, 0% down VA loan as long as they qualify.
Wow.
I
That's
mean,
pretty crazy.
you gotta, in order for the veteran to take that on, you're gonna want a cash flow, right?
Mm-hmm.
But you can do it.
Good to know. All right. So, if someone's interested in doing this, definitely reach out to me. Definitely reach out to Irvin. I'm going to link Irvin's info in the notes below. Irvin, any last thoughts that you want to share with people before we end this?
Yeah, if you're a veteran or anybody else, like anything's possible. You just got to ask the right people.
Got it. And I guess one last note from me. We're in a very interesting time in the real estate market now that rates are starting to get cut. So
Mm-hmm.
what I've noticed just talking with buyers and sellers is a lot of people have been sitting on the sidelines
Mm-hmm.
waiting for, market conditions to improve. So lower interest rates, lower prices. And I think now that the lower interest rates are starting to show up on the horizon here, we're going to see more people getting into the market, potentially creating more competition, driving prices up. So if you've been thinking about doing this, maybe now's a great time before rates get cut too much. And if you're a veteran who can do a streamline refinance, maybe get in now, take advantage of some short-term appreciation as rates go down, and then you can do the streamline refinance. So you basically kind of have your cake and eat it too.
Yeah, one thing I wanted to add is I know, and I'm not trying to get political or anything, but there are deals that you can find in the next 6 weeks to 2 months that are going to be a needle in the haystack because you have people that specifically won't do anything until the election's over. So
Mm.
regardless of which aisle you sit on,
Mm-hmm.
they they don't affect the federal funds rate. They affect housing policy. So if there is a property you like, and if they're waiting on the fence, and whoever their preferred person is, they may say, okay, this person got it. Then but there's other opportunities out there that they're going to miss out on. And to your point, they're going to miss out on the rate depreciation, getting a good deal. because we are going in the fall, right? So it's typically a slower season,
Right.
traditionally, right? At least 2 to 4 single family states. So don't let that inhibit you from getting a good opportunity, and talk to, Cody, your real estate professional or your mortgage professional.
Awesome. Well, yeah, Irvin, thanks again. This has been great.
Thank you, man.